Well, earlier on, Francine Lacqua spoke to two Chinese delegates in Davos. One is the former People's Bank of China policymaker. He's now an IMF advisor, Zhu Min. And the other is Zhang Xin. He's co-founder and CEO of the property developer Soho China. Francine asked them what their perspectives were on China's position in the global economy.
We are in a macro environment, which is, very, you can say that is overheating environment in China versus, in the developed world, which is, high unemployment and stagnant growth. So in this world of, fast growth in China, all the asset prices goes up, all the prices goes up, right? So real estate being part of the investment-driven economy, the prices goes up even faster. And so the government last year came out with a very severe austerity measure to control it. They said price ceiling, they said quota for each family, what can you buy, one family, one apartment. And just yesterday they announced that for this year, if you want to buy a second apartment, you need to put down 60% down payment. So as severe as you can imagine. But actually, if you look at, by the end of last year, you look at most of the public companies, developers, everyone posted a record year, and price continued to grow. And I think in a way that it's giving us a time to think about, China's economy, its market force, it's quite strong. It's probably stronger than what the government think.
Now, this is a concern, I guess, because we do have this overheating, and if we're growing by more than we can think, they probably have to increase the policies they put in place to keep this inflation and this under control in general. Zhu Min, you were part of the policymakers. Do you believe they have a very good handle on the situation?
Yeah, as Zhang Xin said, and he gave a very vivid picture from both the macro and the micro. I think this is a very powerful evidence. And on macro side, obviously, you mentioned because the output gap is very much closed in China today, given very strong growth in the past 2 years. China moved into its little bit overheating phase now. You got to be very careful to do the macro measure. Inflation pressures are getting on. Still in the first stage, basically it's a food price, but food price accounts 37% of Chinese CPR. If you account the commodity price, account another 9%, the housing account 12%. So if you add them together, it's quite a big thing.
But do we risk having asset bubbles?
We see the housing market is pretty hard, but I don't think it is asset bubble yet. As Zhang Xin says, all the company had a very good year last year. But we got to be very careful because with strong capital flow, a lot of money moving to real estate sectors. And so that's the reason government very much tightening on the monetary policy and put a lot of measures on the real estate. So yesterday's another new rules and untitled things. But I think this is very important because to maintain a sustainability for Chinese economic growth.
Zhang Xin, are you concerned that there's so much cheap money out there because of quantitative easing coming from the US that actually it's being poured in some of these emerging economies and in China without really thinking about the consequences?
Well, I think this is inevitable. If you look at, Chinese banks that are largely controlled by the government, last year, or actually has always been the case that when lending to developers, the interest rates are higher. We typically pay 10% higher. This year, I've been told that we might be paying 15% higher. Now, you can say that then where do the developers borrow, right? But international capital markets the doors are wide open. So last year, again, I look at real estate companies, everybody issued high yields, new equities. So while you can manage to control one part of the economy, which is China, you cannot control the rest of the world. But we actually do live in a globalized world. It's very, very hard to control.
How do you see the situation in Europe? Some CEOs must come up to you and try and do business because you're in a much stronger position than what we have here in Western Europe.
I look at European markets all the time, and frankly, compared to China, even though the yield in China are on the declining side, but still with the growth and with the with the cheap cost, it's a more attractive environment in China than in Europe.
How do you make China sustainable and how do you make it the bigger player in the world economy? We've seen, for example, China trying to use its political clout and economic clout in buying some Spanish bonds. Are we going to see more of that in the future?
Well, I think there's two things. The first thing is for this year, obviously the few challenges. So once the inflationary pressures is really on, how do we manage inflation expectation in China? I think is a big issue. So there's a need both demand policy and the supply side policy. On the demand side policy, it's further tightening monetary policy. So this is very important to cooling down the demand side. But on the supply side, it's also really need to facilitate on supply side to getting particularly the food sector supply increase to take care of the food price volatilities. I think those is very important issues. But also China is really in the very important position to switch away from exports-driven growth model to the domestic consumption-driven model. And last year we thought, the trade surplus dropped from, say, in 2007, 10.8% of GDP down to roughly 4.2% last year. So moving on that way. But this year, as concerns, the U.S. will have a very strong growth rate. And so U.S. may open the door again. China may re-export again. So global imbalancing situation can be getting worse. So I think if China can keep, on that way, stick on the domestic consumption-driven growth model, I think that will be the main challenge for China domestic policy. Internationally, as you mentioned, China obviously will take more responsibility and play more roles in those things. I think first things, of course, is still the responsibility on unbalancing issues and increased domestic consumption, and obviously international corporations on the capital flows and exchange rate regimes, which is showed in just last few weeks, President Hu Jintao's visit getting the consensus between the U.S. and China.